Thank you very much, Tim, and I'll do exactly that. Good afternoon, everybody. Yes, I'm Karim Nejaim. I'm the CEO and MD of ActivePort Group. Just a little bit of background on me, if you haven't heard me speak before. I'm 25 years in IT and telecommunications, 14 years of which was at Optus and 7 years at Telstra, where I finished as Executive Director of Product Engineering about 2 years ago. And in that role, my part of the organisation built all of Telstra's products for all segments across all technologies. And I decided to get out of the game of large businesses. Wasn't directly looking for a role as a CEO of a publicly listed company, but came across ActivePort. I was invited to be on the board, but then I saw the technology that ActivePort had. I'd spent a bunch of time in telecommunications. It joined a lot of dots, and I was very excited to join the company as CEO about 18 months ago. And what I'm about to run through in this presentation, I hope you'll see is almost organisationally transforming. We started with a strategy and a plan about 18 months, 2 years ago. We listed, as Tim mentioned, only in October of last year, but we're starting to see the strategy deliver exactly what we wanted it to deliver and see the market responding brilliantly to the software we have and what we can do in the market. So if I go to the first slide, and I'll try to keep everything here as simple as I can technically. ActivePort's a software company, and what we're about is helping our customers connect across a city, across a country, or across the world. Our first product is SD-WAN, which is just one of those great industry terms at the moment, but it simply means software-defined wide area networking. And that means that we can build and control networks in software, and via the second tile there, our orchestration capability, build networks nationally, internationally, but also orchestrate lots of hardware, cloud, etc., all from one screen. I'll explain a bit about that in a moment, but we believe we're unique in our capability to build network and also orchestrate. And lastly, we've gotten into cloud and gotten into edge compute capability, particularly with one of our partners in gaming. So on to the next slide, it'll start making sense for you as I set out the stack, to call it another thing that we work in. We don't know of another company in the world that allows telecommunications companies and enterprises to manage their hardware, whether it's from Juniper or Cisco, to manage their networking through people like Console Connect and Vocus and Equinix, and all of their cloud services in one screen with a single pane of glass. The advantage we provide is that we can build all of those networks, but we can save a lot of money for the telecommunications enterprises that use our software, because instead of using 20 people to manage all of the technology, you can use one using our software, because we can automate, we can orchestrate and offer all of that management from one place. And the test we had into the market is, did the market want this and did the market understand? And if we move on to the next slide, I'll show you by each of those segments where we have traction and how it's pulling through for us. In SD-WAN and SD Internet, our customers are telecommunications providers and managed service providers and ISPs that wish to sell networking to their customers. So they sell our software in competition with people like Cisco and others into enterprise. And we have about 30 partners around Australia and around the world selling our software at the moment into enterprise. The second part of our software, and it is the same bundle of software, the second part of our software is around orchestration. And this is the area where we have the most traction, the most interest, and it is around driving that digital transformation and cloud adoption. So we have a customer at the moment, by way of example, in India. And what that startup telecommunications company has decided to do is use our software at the heart of their business to build and manage all of their networking and technology capability and deliver services to their customers. So our software is at the heart of that company's telecommunications network, building services for customers in software from a single pane of glass, as I said, instead of having lots and lots of operators. And we're fortunate with that deal to be setting up with that startup, as I said, in a part of the world that has 1.12 billion telecommunications subscribers. It's countries like India, some parts of South America, into Southeast Asia, where we're getting the most traction. And assisting us with that is our latest announcement. We announced a relationship recently with a company called Radianarc, where we have built for them an edge cloud capability. And we build, deploy, and manage the edge cloud capability, but using the same software as SD-WAN and orchestration. We manage all of that connectivity from customers inside the telecommunications company and with all of the gaming providers to help Radianarc sell games to tens, hundreds of millions, or even billions of subscribers as they continue to roll out over time. And that deal, as noted here, is a $8.65 million minimum deal over the next 5 years. But in the case of SD-WAN and cloud, in telecommunications globally, there are not many areas of the market that are growing. And as you'll see from my notes on the right, the SD-WAN market is expected to grow to 30 billion by 2026. And it's SD-WAN and cloud are the two areas of growth that are present in telecommunications globally. That is right in our wheelhouse. That's exactly what we're delivering into. So the next slide, please. So our company has come together since October. We've made a couple of acquisitions, but what we are able to show now, coming out of H1 and into the end of Q3, we had a $3.5 million increase in revenue, which is 52%. And that shows the underlying strength of our services business, but increasingly, as if I ask you to go on to the next slide, please, and this is the really important piece for the company, and I talked about the position we have being transformative. Our revenue, as I mentioned, has grown, but the software revenue, the monthly recurring software revenue that's at the heart of our business, out of the foundations of Q2 and Q3, we've begun to drive revenue in the way we always hoped we would. And you can see that now almost 30% of the revenue for ActivePort Group is driven by our software revenue. What we can also see from our numbers in our recently released 4C is that the gross profit in that revenue has risen from 32% to 62% Q2 and Q3 on the back of that software revenue. Our software revenue is very, very high margin, and it's a margin play for us, or a play for us through those telecommunications providers, where we've written the software once and now we can monetize that software. You can see here from Q2 to Q3 that software revenue has turned on, and now we're heading in the trajectory we've been promising the market we'd be heading into out of those foundational quarters I was talking about. What that all means, onto the next slide, is we spent $2.4 million running the company in Q3, but because of that revenue turn on in software, which we have been promising the market since October, we have line of sight now to going along for the next couple of quarters with a very minimal net cash usage. So one thing for everybody, these numbers are indicative only. They are the projection we have for the company at present. But with the Radianarc contract we have signed, with the Indian telco contract in the process of signing, with several other large software contracts we're in the process of signing, and a number of our customers, both in Australia and into Southeast Asia, the sales cycle is complete, the delivery cycle is completing. We now have the revenue uptake in our software, and we can see, as per this slide, that cash contribution means that our cash burn will slow for the next few quarters, and we'll start building cash as a company post that time. So again, it's highly valuable for us around that software revenue, and it's making a significant contribution to the company's bottom line in cash. So as we head on to the next slide, I'll set out a couple of things for you. What we're driving at next is the Q4 and beyond is the big end of town is most attracted to our software because of the efficiency it can provide, because of the utility it can provide. And instead of taking days or weeks to build a network globally, we can do it for you in our software in seconds or minutes. So we have an increased sales focus in SD-WAN and orchestration into global telecommunications, building on the success of Q3. We also have a future in enterprise networking. So the bigger end of town customers using our software to build networks internationally, nationally, and incorporating cloud via our via our managed service, ISP and telecommunications partners. We will launch a new product called Global Edge. And this product is all around a portal that will allow a customer to go on and say, I'd like to be operating out of Tokyo, London, Dallas. We will automatically build a network for them, and if they wish to, incorporate cloud into that. So it's a point and click, very quick to cache for us from the point of order. And lastly, a focus for us with our important partner, Radian is to take the pipeline of 11 telecommunications companies that we are delivering into. We have a sales order pipeline of 36 of those now. So delivering into Radian is key for us as well to deliver that $8.65 million and hopefully exceed it. So into the next slide. What does all of this mean for an investor? We now can demonstrate from our most recent ASX submission that we're moving to a larger percentage of our revenue coming from that highly profitable monthly reoccurring software that, as I've said, we've been promising the market since we listed. We have a product which is highly innovative. I like using the term unique, but what that software does, and in our conversations with Gartner, they have asked us, well, you're a networking company, an orchestration company, a cloud company, we need to put you in a box. Well, we don't fit in that box because we're joining the dots across networking and orchestration and cloud management, automated in software, which we believe is attractive and innovative internationally. And the market has given us a very strong positive response, and the amount of interest our software is driving is increasing. Our positive outlook is now backed by numbers. It's very nice to be the CEO of a publicly listed company, having gone through a raise, having gone through a listing, where you're making a lot of promises, you're making a lot of guarantees based on where you believe the software can drive our revenue to. We can now back that out in numbers, and we can start showing, as per my earlier slide, that we're now driving towards a much stronger position in cash and a much lower net cash burn and heading for that cash flow positive territory. We also have a number of new products coming down the pipeline, and I've been fortunate enough to surround myself with a very strong management and leadership team. So the strategy is working, the strategy is in place. It's all about execution now, and that's our focus Q4 this financial year and beyond. So Tim, that's about as quickly as I can explain ActivePort. And please, any questions for everybody?
I think you've done a great job. Thank you. When you showed those tiles in terms of the different areas that you service, so with a telco company and that SD-WAN, can you is the idea to bring you walk in there and you're solving a common problem, and then is the idea to convert them into this subscription model moving forward?
Great question. Yeah. So the way that our software is sold, or the way that the SD-WAN component is sold, is companies like Telstra and Optus and others over the years have sold big fat pipes to companies for links. The internet connectivity is now so consistent and fast that it's possible to build networks over the internet, manage that in software very quickly with high bandwidth. So the first thing our software does is it will manage the old and manage the new for you. But you're quite right. Companies are moving away from, at the rate of around about 73% per annum, away from those old big fat pipes to SD-WAN because it's flexible. And so the idea is you buy an SD-WAN service, you connect all of your offices, you throw away all of that expensive set links, and that for us becomes a monthly recurring revenue per port for SD-WAN. So what we start seeing from that foundation I was talking about is the software goes into one of our customers and then begins to grow and grow and grow. And that just becomes a high profit software revenue for us, monthly recurring, yes.
And do you have software subscriptions outside of the telcos servicing different clients for different needs?
Yeah, so we have telecommunications is our primary area of focus, and telecommunications companies can use our software themselves internally or sell it to their enterprises. Our software is extremely flexible, and I mentioned before talking about cloud and Radiant. We didn't build new software to go into cloud from networking. We used the same software and adapted it slightly to do cloud stuff. Because, and it's a difficult concept for those who haven't spent years in technology, having one place to manage all of the complexity in technology and cloud and networking is hugely valuable. So wherever a company needs to simplify, automate, that's where we're getting attraction to our orchestration capability, and add in the networking bit as well, and you've got an entire solution.
And what's the sales process look like for these global telcos? I mean, I can't get through to Telstra at the best of times. It must take some time.
So that's a really good point. When traditionally, what used to happen is exactly what you just said. If you had Tim McGowan Inc. and you had an office in Tokyo and Sydney and Dallas, you would need to call Telstra, and they would need to call telco in Japan, and then you'd need to call a telecommunications company in the US, and they'd all put you on hold, and weeks later, you might get one link. What happens now is that using some of those global transit providers I was talking about, like Equinix and like PCCW and others, a lot of the network is already there. You just need a path across it. And so one of the things we love doing in our presentations is click, 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 buy. And the question everyone asks in the presentation is, when does the link get built? And we say, well, just did. You've now got connectivity between those two places. So the sales cycle for us into telecommunications companies takes about 3 months. We have to bring their salespeople up to speed, deploy our software into their environment so they get to use it. Then their salespeople go into their sales cycle. Once one of their customers is purchased, we can turn on revenue very quickly. But it's about a 3 to 6 month cycle from first conversation, helping our partners to the point that they have a sale. The global edge piece I was talking about radically shrinks that to hours or days from I want a network to the revenue turning on.
And I assume you're introducing a significant cost reduction to these telcos?
Absolutely. Having spent so much of my life around telecommunications, what happens, and it's the thing that the Indian telco is so interested in, is they don't need 5 or 6 different systems, one to manage that tech, one to manage that tech, one to manage the network, one to manage the cloud. They can do it all from one place. So you can see a 4, 5, 6-fold reduction in cost. The cost never actually turns on. So they can go into selling lots and lots of services with a really slim back end, managing all of those services. So it's upside for the telco as well, turning on networking and revenue from networking, but with a really thin back end using our software with much, much lower cost than having 20 people typing on keyboards.
And no real competitors in this space. You must be an attractive option with the more kind of contracts you pick up if the software is this unique.
We have competition in the SD-WAN market, which is quite tight. In the orchestration market, as I said, they're quite unique, and being able to orchestrate between network and cloud is quite rare. One of the things that we have in our advantage is we're not inside a telco and we're not inside a vendor. We're completely vendor agnostic and telco agnostic. So when people do try and copy us, they tend to do it from inside their company, and they can only do it to their stuff. So the advantage we have is we're growing it outside all of those guys and can orchestrate most of them. I've been asked this by many investors. Yes, we will get copied over time, but I believe what we have anywhere up to a 2-year jump on the market. And the more we deliver our new technologies, the more products we roll out, we'll keep ahead of the market. It's flattering when people start copying you. We'll see if that starts happening, but we've got the market to ourselves in this breadth, we believe, globally at the moment.
Great. That's all we have time for, Karim. Really interesting story, and we will follow up again later in the year.
Thank you, Tim. Thank you,
Thanks
everyone.
for your time. Have a nice weekend.